Hello guys and welcome back to the channel. So Palantir had a very bad day yesterday, and as many of you have bought the stock before and have held it, many of you are really hurting. Luckily I started buying it maybe a week ago. I'm gonna show you on the chart. So is it time to freak out now, and should we maybe go all in, or should we sell out and just book the loss? So I really wanted to talk to you about this. If you like this video, make sure you hit the subscribe button so you don't miss any of my new videos. So basically I'm super bullish on Palantir, right? And in times like these, when the stock price fall, it's very important to separate our emotions and, you know, look at the facts. And we have to establish, is this a broken stock or is this a broken company, right? And this is where you can see 7 point something percent. It has basically closed, I think, on, there is only 2 days in its history. No, okay, few days here at the IPO when it was cheaper than this, but it's a very low price, right? So now I'm gonna do a valuation on this company that is going to be a bit of a financial engineering, but I do want to speak about the current macro environment, because, okay, so again, it's very important to differentiate if the current conditions that affect the whole market, the Fed, you know, the inflation fears, the war, the high oil prices, like, do these affect Palantir? And if they're not affecting Palantir and the price just keeps going down, then it's a sign to be diamond-handed, hold the card, and you know, see what you can sell so that you can buy more if you are really have your conviction in the stock. Like me, I'm at the point of seeing if I can sell my organs. So if you're interested, let me know in the comments. So basically, as I said, the war that broke out is actually a catalyst for Palantir, because they have had some Europe was going slower for them on the government side, because obviously European companies have, you know, a certain amount of I wouldn't say adversity, but maybe a little bit of mistrust that, you know, their data is being handled in the US. And definitely they need Palantir now that the Russians are attacking, and this is going to be a catalyst for them. The oil price has nothing to do with Palantir, and okay, you could argue that, okay, Palantir is not affected by the oil price, but are their customers affected by the oil price? But the thing is that Palantir is selling to Fortune 500, S&P 500 companies and governments, and even if the oil price is higher, those companies will still need the service and they will have the dough to pay for it. So it's again a non-issue, you know. Then are the inflation fears correct? And here's the thing, that like, the inflation hurts non-profitable growth companies that have a lot of debt, right? This is like the worst mix that you could imagine. And Palantir, if you look at its balance sheet, it doesn't have I mean, it has a little bit of debt, but basically it has more than 2 billion on the balance sheet in cash. Let me see if I can show this to you. So here we go. Took some time, but so as you can see, there is 2.5 billion in cash on their balance sheet, and their long-term debt is 220 million. So basically any moment they can decide to pay off their debt and be off with it, and it doesn't really even make a dent on their balance sheet, right? So the debt is absolutely no problem. So now the non-profitable companies, and here is where I'm going to show you a little bit of evaluation, because I believe that they're secretly profitable. I know you're going to disagree with me, but if you look at their, or some of you will disagree with me, but look, if a company was perfect, then the price would be up, and then there would be no point in investing, right? So you have to have some points about a company that cause it to be mispriced, and this is what makes an opportunity for savvy investors like you and me, right? So if you look here, this is their financial year 2021 presentation. And they're saying that they have an operating income of 473 million if you adjust it with the stock-based compensation, right? So basically they are profitable, and Alex Karp even said in the conference call that they are going to normalize the stock-based compensation, and he gave a very good explanation of why it is like it is, and it's going to be normal like any other company, and I believe him on this. And so I'm going to count with this, right? So I want to see how could we evaluate this company to know, are we at the bottom? Can it go more down? Is there more pain? Or is this like the bargain of the century? And the thing with the valuation, guys, is that it's not an exact science. It's a lot of like, what do you think? And, you know, like, there is not a correct valuation that someone can look at and, okay, this is the correct price of something. So this is why when you invest, you want to have very big margins, so that even if you're slightly off, you know, you still make a lot of money. So you have 473 million of operating income. Then we can actually count the P ratio, right? Because if there is, I mean, okay, it's an adjusted P, it's my P ratio, okay? Don't, I know some of you are going to disagree with this. All right, so basically if you count with that, the cash flow from operation was 473 million, or that was their earnings, right? And their market cap, I also looked this up on Yahoo Finance, with this share price is currently 21.3 billion, right? This would give them a PE ratio of 45, right? And then, so we need to put this in perspective, okay? Is this a high PE ratio? Is it a low? Is it, you know, we have to compare it with other things. One more very important data is, I look at the analysis, and the analysts on Yahoo are expecting this company to have an annualized growth of 43% for the next 5 years, right? So we can use this. We can count, you know, lower a bit also if we want, but let's use this number for this example's sake. So this gives us a PE to growth ratio of 1.5, right? So now Peter Lynch, who is a legendary investor, said, I believe that if a stock is below 1 on a PEG ratio, it's a fantastic buy. But when he said it, the interest rates were a lot higher, so it's a way lower, you know, interest. And even if the Fed is going to raise rates, it's still way lower than it was before, right? So I believe when you look at, you know, Facebook, Meta, Google, these companies, they are at 1.7, 1.8, 1.9. I believe Amazon is maybe on 2.1. Don't quote me on this, but it's around this number, right? Even after this huge fall. So you can see that from this point of view, the stock is very fairly priced, right? Now, I want to put this in perspective. I found this fantastic compilation by, I believe it was done by New York University, I'm not 100%, NYU, yep. And they are compiling the industries, you know, how many firms are there, the Ps, trailing Ps, forward Ps, and, you know, then we can actually compare, like, how is Palantir compared to its peers in the market, right? And Palantir happens to be in the software system and application branch. And you can see that the industry average PE is 107. And we are at, in my calculation, 45. Again, this is my calculation. I know that this is like financial engineering a little bit. But again, if the stock wasn't misunderstood, this was the price would be much different, right? So that's partially what creates the opportunity in this. So based on this stock is less than half compared to its industry average, right? So then you look at, I believe this is forward PE, yep. So the forward PE is 104 in the industry. So now to look at forward PE, I plugged in that, okay, this number grows, what did I plug in? 30%. Okay, so if we just say a 30% growth in 2022, then, and the stock price doesn't move, okay, then suddenly you have a 35 forward PE as opposed to the industry average of 104. So in this regard, it's 3 times undervalued, okay? Then we look at here they have the PEG and the expected growth. So the expected growth in the industry is 22%, and the analysts are thinking that it's going to grow double the industry average, right? And the P to G ratio of the industry is 1.39. Currently, we have 1.05, okay? Again, you can also make your table. You can play with the numbers. Let's say that they only grow 30%, right? you are still 30% below the market average. And if the stock price keeps on falling and it's at the same price next year, you will be half below the industry average that is in this. Okay, so when I look at this, Palantir is a fantastic deal, right? But are we at the bottom? The thing is, we don't know. The stocks can stay you know, if you're on margin, I don't envy you. You know, there's this saying that the stock prices can be irrational for longer than you can stay solvent. And how I would think is, if you have the belief and the stock price keeps going down, treat it as a gift from heaven and just continue buying and cost average your, you know, your purchase down. Because when you look at these numbers, you are in a fantastic deal and you need to have diamond hands. So I hope this video helped you. Please let me know if you're a Palantir investor, how much you're invested at. I'm very curious. What was your time frame when you invested? And I will see you in the next video. Bye bye.